What's up, everyone? This is Silver Slayer. So right now, we see gold, silver, platinum, and palladium in the red. It looks like a pretty strong downtrend. Now, why is this happening? We're going to explain all of this in today's video. You're going to want to stick through this because this is important stuff. It's a very important lesson to be learned, and a lot of people are probably a little freaked out. But I got y'all. I'll explain everything that's happening, and by the end of the video, you should be a little more comfortable and confident if you are investing into silver, especially if you are new. Now, what's happening? Right? What's happening? You can see the 24-hour chart, silver's down $1.12. And right now, the dollar index is pretty much mooning. That's what they'll call it in this article. Silver sinks to the bottom, faring behind gold as US dollar moons. First things first, I am giving away over $1,000 worth of silver to 5 of you. So make sure you go enter my 40,000 subscriber silver giveaway. I'll be announcing the winner in a couple days. You got a couple days to enter for a chance to win over $1,000 worth of silver. The link will be in the description to that video, or there will be a pinned comment at the top of the comment section. Just click on that, make sure you're subscribed, go do what you got to do to enter in that video, and may the luckiest or the best stacker win. So let's jump into this very, very weird situation. Now, anytime the economy is unstable, you're not going to see stable prices. It's going to flood it over into the markets because people who are emotionally invested are very confused and very, caught up in all the chaos and controversy, are going to be investing and transferring and doing all this trading, and that's going to also go into the markets. It's going to affect and influence the market. So that's what you're seeing. Now, the US dollar has a direct correlation to precious metals prices. Right? High dollar index, low precious metals, and vice versa. High precious metals, low dollar index. There's a direct correlation. So if the dollar index is up, then that's obviously going to push precious metals down. But we know that that is not long-lived. It's all short-lived. The dollar index is not going to stay high forever. Probably not very long at all. But since silver's had so much attention, if a little bit of media gets behind this, people are going to be panic selling, and it's only going to hurt more. Now, I made a video talking about how this correction was going to happen a couple days ago, and that's because it broke below the support level. And when it breaks below the support level, it drops pretty fast, a lot quicker, and that's what we're seeing right here. But this is nothing to fear. This is actually good. You want to know why? Because we get to buy silver for cheaper, lowering our dollar per ounce average. And if you think that $25.26 is too expensive or that's overvalued for silver, then you shouldn't be investing into silver, and probably not investing, period, because that means you don't understand markets, you don't understand how the economy works, and you don't understand how investing works. If you understand anything about the economy, even a little bit of history, you would know that $27 trillion in debt by the United States, the rate that we're throwing out money, what that's going to do to influence the dollar. Also, looking forwards, all the benefits and all the opportunity and everything, looking behind the context of silver markets, you would know that $25 is a steal for silver. It's a steal. So right now, you should not be worried. You should be buying it. Buy low, sell high. Buy silver while it's low, sell it when it's high. Because I can promise you, think a year from now, think even 6 months from now, think 5 years from now, 10 years. Do you really think silver's still going to be $25? No. Think about how much is going to happen. So right now, you shouldn't be worried. I don't know why people worry when the price drops. It's like they need validation that it's going to keep going up, but it's never going to keep going up. Use these periods of time as opportunity to get silver for cheaper. So anyways, let's go into what's actually happening, and let's talk about this. So the gold to silver ratio spikes as silver longs get squeezed by dollar strength. A technical move sent the silver USD ratio to daily on the S1 and the Fed, or the back of the Fed Powell's comments of market volatility. So Federal Chairman Jerome Powell said something about volatility, And people get worried. People listen to speculation, and I told you guys speculation is influencing the markets more and more. You guys know I hate that word because gold and silver should be fundamentally, they should be fundamentally ran off of supply and demand, right? How much production is coming in, what's the demand coming out, how much is coming out of the ground, right? The recirculating supply should be going more off of stuff like that. But nowadays, a single tweet from Donald Trump could send prices flying, and we're living in a different day and age, and we got to get used to it. We got to adjust and adapt accordingly. The price of the white metal came under immense pressure on Thursday, despite an optimistic outlook for economic growth prospects from their chair of the U.S. Federal Reserve, Jerome Powell. At the time of writing, silver to USD is trading around, or silver is trading around $25.29 and down by over 3%. The gold to silver ratio is trading around 2.7% higher, with gold down less than 1% on the day. So gold is outperforming silver a little bit. And rightfully so, because gold is a monetary metal solely. So if the dollar's rising, gold isn't going to get hit as hard as silver would, which is a industrial metal as well. The U.S. dollar has mooned on the back of the U.S. Treasury yields, busting through critical levels with the 10-year yield well above 1.5%, advancing to a high of 1.54%. Despite Powell's dovish rhetoric and cautiously optimistic outlook or economic outlook, U.S. stocks have also fallen as markets weigh on the prevailing risks to the economic recovery pertaining the threat of higher rates and inflation. Everything is going to come around full circle. If you can't see what the aftermath of this is going to be, then, I don't know what to tell you, because it's fairly obvious. Silver's technical route. Let's get down to the fundamentals, the technicals. However, there is little fundamental as to why silver has fared so poorly. Relative to commodity prices in general that remain in good stead. And that is true. There's little fundamental as to why silver's fared so poorly. You would think that silver would outperform gold in this situation, since if the economy is recovering, or if the dollar's rising and silver's an industrial metal, that would actually benefit silver and less of gold. So I don't understand why gold is outperforming silver. So the CRB index is bid by 0.4% on the day, only modestly pressured around the Fed event. That being said, oil prices are the major component of the CRB index, which have rallied over 4% on the day. There was just less dry powder in silver compared to gold, and higher long speculative positions were potentially squeezed in a technical drop below $26. So that makes sense. Once it did break below that, like I was talking about, if it breaks below the support line, it kind of just goes downhill. So anyways, let's jump into something else very interesting. Hold on, let me find it. So gold, silver, and other precious metals poured into the U.S. as purchases of other overseas items dropped. Here's why. See, like I was just saying, everything's intertwined. Everything is intertwined, cause and effect. One thing happens and it could be a domino effect. Remember when everything started from the U.S.-China trade negotiations? Everything started from the U.S.-China trade negotiations. Then you had the Saudi Arabian oil fields getting attacked. Then you had the Hong Kong protests, and then the pandemic. And everything kind of stemmed into this huge downpour. Even without the pandemic, the U.S.-China trade negotiations and all that stuff that was happening, that chaos, that controversy, was already affecting precious metals prices. And that just put the nail in the coffin when the pandemic hit. And that's when we led to $11 silver in March. So at a time when America's purchases of and here's another thing, the trade wars, U.S.-China trade wars, remember how interesting of a time that was when the first thing they finally agreed to was like wheat or soy or something? Everything is intertwined. At a time when America's purchases of other overseas goods have ebbed, imports of gold, silver, and other precious metals are surging. And that's something that's not too surprising, right? It's not too surprising. Mexico and Peru pumping out silver all over, right? All over the world. They accumulate 40% of the global silver production. Those two countries alone. So the value of precious metals pouring into the country hit a 19-year high last year, $55 billion of influx that doubled the value of 2019. Analysts and traders say the trend reflects rising demand among purchasers that range from Wall Street investment funds to ordinary people buying up bullion. And here we go. This is what I've been talking about. Silver demand comes in many different shapes, forms, and sizes. You have people like you and I that just stack silver as a hobby, like we've been doing for years, silver stackers, core silver stackers. Then you have people more from the digital side of it. You have, the businessmen, you have the guys they're going in the SLV, and you have people like that. Then you have, coin shop people that are, retail sellers. Then you have big business people like Tesla or whoever that needs it for laptops, cell phones, electric vehicles, 5G towers. You have that side of it, big business and individual people like you and I. So silver demand is coming from all angles of the spectrum. All angles of the spectrum. We've sold a lot and we buy a lot in return. And that's someone from a coin shop owner who's gone from 100 to 200 daily phone inquiries, as many as 1,000. There hasn't been a period over the last year where I could say business has slowed down. Not over the last year. Remember last year, the U.S. Mint sold out of American Eagles? They sold out of American Eagles. U.S. Mint, a couple months ago, or like a month ago actually, cut off the supply of silver and gold eagles to bullion dealers, to coin shops, to distributors, and that was that. So the rest of their stock, their supply, when that went, they had to find it from other retailers. Hot items include bullion coins such as American Eagle coins made by the U.S. Mint, Canadian Maple Leafs made by the Royal Canadian Mint. So U.S. imports of precious metals hit a 19-year high in 2020. A 19-year high, but that was a year that the production was down. It's interesting to look at this chart. Very interesting. You can even see in 2011 when silver was $50, it wasn't anywhere near this. See, 2011, $50 silver, recession/depression, started from the credit crisis right here. You can see when it was the lowest. And then silver prices start rising. And then the last time we see demand this high was when silver was $50. But look now, it's doubled that. And that's because we have a recession/depression, $1 trillion stimulus, a global pandemic, and silver demand for all these new technological gadgets that silver is a key component in. So the price just hasn't caught up to that yet, but it's going to. It's in the trend. Non-monetary gold, a category that excludes gold bars owned by central banks, accounted for about 2/3 of the total U.S. imports of precious metals in 2020. The Census Bureau's count for other precious metals include silver, platinum, palladium, and more obscure sources such as ruthenium and iridium. In just the first 3 months after the U.S. entered lockdown, the nation imported $23 billion in precious metals, blowing past the total for all 2019. Although the rate slid later in the year, imports remained higher than pre-pandemic levels every month. Pre-pandemic levels every month. So you see that things aren't going anywhere. Things aren't slowing down. The pandemic isn't slowing down. Nothing is slowing down. It's only actually going to pick back up because now we're going to see the consequences, the aftermath of the stimulus, more excessive spending, so many other things that are still yet to come, and it's all going to put precious metals on top. Whether it's scenario A, B, C, or D, whether candidate A, B, C, or D won, every outcome looks towards higher precious metals, specifically silver prices. Every scenario, and I say specifically silver, because even if we do start recovering economically, even if we do go into recovery mode after the pandemic or whatever, it's still going to put silver on top because silver is an industrial metal, not just a monetary metal. It's kind of like the best of both worlds, or it's kind of like a win-win situation since silver is used in all these gadgets. Even if we start recovering, we're still going to need silver in all these 5G towers, these lithium-ion batteries, Tesla, all these new electric vehicles, the solar panels with zero emission by 2025 or 2030, and the whole world jumping on board, silvers and photovoltaics. So every situation means higher silver prices. So when stuff like this happens, you can't get scared. You can't start panic selling. You can't invest emotionally. Invest with your head, not your heart. If you can think rational, then you would know that right now is a great opportunity. Most people were buying silver when it's $30, but right now, I bet a lot of people aren't buying, which is crazy to think about. Right now, everyone should be buying at $25, and there wouldn't be as much buying at $30 because the price is high. It's a high price. Why do people buy it when it's highest and don't buy it too much when it's at a good deal. Interesting. Precious metals, true precious metal stackers, we buy the most right now. And then when it's at 30, we hold off a little bit and we'll pull back because we know the price is going to correct a little bit after that it goes into overbought territory, right? That's what a smart stacker does compared, or a smart investor does compared to, a newbie or an amateur. A lot of people bought Bitcoin when it was at $58,000. A lot of people held off then and then bought it a couple weeks later when it went down to $45,000. You see the difference here? You don't always want to buy when everyone else is, because that's usually when the price is the highest, because everyone's talking about it, everyone's pouring money into it, goes into overbought territory, then it corrects back down, and that's when you buy. Anyways, I'm going to wrap this video up here. The link to these two articles will be in the description. Make sure you are subscribed. Also, go make sure you enter my $1,000 plus silver giveaway. You do not want to miss that. It's going to be a big one. The biggest giveaway I've ever done on this channel. But even though it's a huge giveaway, the idea I have for my 50,000 subscriber giveaway is even crazier. So you want to be sticking around. I post daily videos. So not only do I do a lot of giveaways, unboxings, I have a pretty cool unboxing coming pretty soon actually. Not only do I do a lot of that stuff, but I'm also posting daily videos, keeping you guys in the loop. I'm never going to talk about stuff you don't need to know. Everything I say, every article I go over is critical pieces of information to affect the way you stack your strategy, which is highly important because you cannot be blindly investing in today's day and age. You got to be kept in the loop. And I got y'all. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.